Hey guys, welcome to this video. In this one, we're going to talk about market value, and we're going to talk about really the mindset that you have to adopt if you want to get things right. Generally, it comes down to basic principles, funnily enough, and that mainly is because the markets are literally just another way of buying something for less and selling it for more. Now, lots of traders unfortunately fail to grasp that concept, and they're not quite sure really what that means. So I'm going to talk about it now. So really what I'm saying, when I refer to market value, I'm saying more or less about where you're getting a good deal effectively. Now, to make money in any business, you must get a good deal on what you're buying or selling. Okay? Anyone who buys anything or sells anything has a way of attaining it, and when they're parting with it, they've got more value than when they had it. That's the point of making money. So number one, if you're going to be buying something for more than it's worth, that won't work. That's not going to happen. And if you're selling something for less than it's worth, same principle. Okay, you're defeating the object of business, or in effect, trading in itself. So you just have to ask yourself, where would you rather buy? Okay, and I'm going to put buy in letters here with a question mark, and I'm going to put sell here with letters and a question mark. Okay, so if you look at this, you've got 1, 2, 3 massive green candles, and you've come up a reasonable, well, quite a long way. So 0.76, roughly 0.86. Okay, so that's a fair amount of a move, and you've come right up. Now, in your brain, you shouldn't be buying up here because you should know we've been preceded by a move up. Therefore, there's a lack of market value. Okay, so that's the first part. Now, if I swap these words around, it should look like it doesn't make sense. And that's exactly right. You shouldn't be buying highs and selling lows. You need to look at what has market value. Now, often, if the move you're looking to get is preceded by quite a few candles of a certain color. So, of course, if they're all green, you know that the price has just come up. Therefore, you shouldn't be buying it. Okay? And the only time that you would buy it is if you got market value, and that would come when the price is lower, because you would attain a dip at that point. So it looks something like this. Okay? Maybe not as extreme, but you could start to scale into the market around these levels. And that's because you're not really buying it high anymore, and you're not selling it low. You're trading within the move upwards. So the move has come up and it's now pulled back, and you're going, great, there's a deal there. I can get long on that and I can attain market value because I'm not buying it at the highest price. I'm getting it on its way up when it's cheaper. And that is the principle of successful trading. When the market starts to rally and starts to trend upwards, you really want to be getting market value by buying those dips. And when it comes down, you want to be selling the pops. So if I just look slightly back here, guys, okay, to this kind of thing, okay, you've got exactly what I'm saying. So the market pops up, and there's a short there, and here, and you can see how this carries on in a trend, okay? Because what you're doing here is you're selling when the market comes up. So the market pops up and you're saying, okay, well, it's not low anymore, so I can sell. And then it pops up, okay, it's not low anymore again, so I can sell. And you carry this on. Now, if you look at how we're on a monthly, this started November 2016. And if you just traded it like that, for 4 years, you would have made money just selling each pop, because you're trading with the trend. Now, when people say to trade with the trend, they're basically saying get good market deals within one sway of the market. And that's exactly right. Okay. So you're not selling it low. You're just selling it when it comes up within that move down. Right. And that's exactly what you've got here. So now you're looking for that to change, and you can buy those dips as it moves up. And again, you're going to be attaining value in what I really call the grand scheme of things. So the grand scheme of things is the whole move, and then what you're getting in between on each step. So remember, guys, always take market value. Now, I hope that really helps. It's quite a short one. If it doesn't help, let me know. Stick it in the comments, and we can really go from there and enhance your learning and improve. As always, see the signature or the description below for more free stuff.